front. But let's get talking with another company that came out with its set of numbers. Mr. SHEKHAR Bajaj, the CMD of Bajaj Electrical, joins us online from Mumbai. Hi sir, we've just gotten your numbers. They're looking quite disappointing, in fact. What went wrong?
Actually, we were, as far as the project business is concerned, which was the worry for the last 2 years, has panned out to be exactly as per our expectation. But the consumer durable and lighting business was the area which in this quarter has really got impacted, and the result of that is that for the quarter, against the EBITDA of 22.4 crores, it's gone down to 8.85 crores for the quarter. For the year, which is more important, is that from a 6.8% margin level, it has gone down to 5.1%, and the consumer durable for the year, it has gone down from 9.6% to 7.7%. So that has really impacted the bottom line. For the first 3 quarters was going well, because the growth is only in the consumer durable, in the lighting and consumer durable business. It is the growth in the 4th quarter has been hardly 0.8%. It's absolutely flat, and you know, cost, publicity, everything was substantially higher in the last quarter, and therefore there's a major impact which has come, which has hurt the bottom line, is because of the consumer durable and lighting business, which has been really shown a degrowth in terms of bottom line.
Good afternoon, sir. But what led to such a big slump that we've seen in consumer durable and lighting? And do you expect this weakness to continue in the next 2 quarters as well?
No, that is what is important. Is that what happens is that unlike in a normal business where you take a project and you complete it and that's the end of it, here in the first 3 quarters there's an annual turnover discount which is given on the basis of achieving a certain numbers, and therefore what really has happened is that in the 3 quarters which the results were out, they were expecting, suppose I'm saying as an example, that additional discount will be 2%. Now the market in the last quarter has been very weak. That's why, in spite of pushing, so they may have we may have ended up giving an additional couple of 2 or 3% extra to just achieve our top line targets, and therefore to achieve in spite of that pushing, we ended up having no growth, 0 growth. So and the fixed cost has obviously gone up by the usual 10-15%. Our publicity, substantial publicity expenses have taken place, and therefore because of that the margins for the year, if you look at it, has gone down from 6.8% to 5.1%, including because of exchange rate and otherwise. In the current year, my expectation is that 2 things have happened. One is that the exchange rate from last month onward has become positive. Instead of being at 61 rupees, 62 rupees to a dollar, is gone down to 58.5, 59 rupees. So we'll get the benefit of the exchange, which was always last a couple of years we've been getting impacted because of the negative exchange rate. Second is that with this stability of the government, because last time, because of instability, a lot of the market was not very good. We've started April very strong, and because the summer has been very good, and with the stability of the government, we expect that we should be able to again come back, and therefore the proof of the pudding will lie when we get the 1st quarter result. The 1st quarter results are very critical, because that will show whether we've got back our margin, or is it something which is still going to be a problem.
On that optimistic note, Mr. Bajaj, in fact, I wanted to ask you with regard to your engineering and profits business. It's shown a bit of an improvement, but it's still trading with some. It's still in the red, because it's shown a loss of around 20 crores odd. But it's a big improvement, really. You're moving towards a break-even.
No, actually, this is not. Actually, there are 2 different things which happened in E&P, which was already projected. Is that there's one, we are closing various projects.
Right.
Which is taking a hit of suppose 30 crores, but there's a new businesses which is giving me positive businesses, so this is a net of 20 crores. From next quarter onward, there will be no negative, for E&P there will be no negative figure at all. Now hopefully in next few years there should be no negative, because we've got over 2,000 crore order book, so orders are sufficient. Second is that now all the old projects, most of it have closed down, which about 40 projects have closed in the last 1 year, which we had projected that we'll close 40 sites, so that has been done. So now all the businesses which are done are at the positive EBITDA level, so there is no reason for any negative, even from starting with the first quarter. If it is minus 20 for this quarter, you can, or minus over 100 for the whole year, next quarter onward, there will be only positive EBITDA. There is no negative EBITDA coming out of E&P. So even if we don't do anything great in E&P, that 100 crores negative EBITDA at least will be not there for the next year, so that the improvement of 100 crores will take place straight away without any. That doesn't require much of no-brainer if you don't have any negatives on E&P.
So I'll come back to the consumer durable side of the business. In the first 2 months of this quarter, have you all had to push, have you all had to give additional discounts? And secondly, what could be a realistic, growth rate that we could expect in, consumer durable as well as in the like?
Personally, I was looking at 15%, but after this quarter's results, I have got a little nervous. So in all our projection now, we are looking at a 10% type of growth that should take place, and therefore against 952 crores, we are looking at lighting for the last year, we are looking at 1047. 10% growth. In consumer durable, 1932 to 2125, which is a 10% growth, and in E&P against 1150, we are looking at 1437, because we have so much orders that this 1437 is almost a surety, because in other businesses it depends on getting orders. Here orders are already in hand, which has to be executed, so therefore that's a 25% growth. So overall, against 4036, which is our actual number for the year, we are looking at, this is the minimum level which I am looking at. We are still looking at our number of 5,000 crore, which we've been aiming at, but after seeing this, I'm making a conservative figure of 4,600 crores is the number which we can safely look at for the current year.
Mr. Bajaj, what's the likelihood of beating that 4,600 to 5,000 crores? Or you said you were estimating 4,600 at the low end, but what's the chances of it going higher? What's the upper band of it?
See, for me, 5,000 is what we've been always talking internally. That's how we fixed up our target, and a little, change in the attitude, see, in terms of consumers, is something which can change it. So we are, and our April has been very strong, May is expected to be strong, and therefore the right answer will come out when we present the first quarter results.
Mr. Bajaj, a final question from my end. What's the total order book at present?
The exact number, somehow I was in the meeting, so I could not get it. But over 2,000 crores, that is true. It's 2,100 or 2,300, I'm not sure, but it's over 2,000 crore for E&P, of which 1,400 crores is for rural electrification, another 500 crores is for the TLT, and another 150, 200 crores is for our elimination business.
Okay. And so what could be the expected improvement in margins or recovery in margins that we can expect in FY15?
See, the main turnaround is taking place even with a nominal increase of similar margin level also in the other two businesses. The E&P, with having 9% negative, 9% negative contribution, if it becomes 0-0 also or something, we are definitely looking at positive. So that itself, as I said, minus 100 crores, it disappears. That itself is a number which you can calculate yourself, that 100 crores won't be there next year. That we can be sure.
All right. Thanks, Ms. Bajaj. All the best for the coming year. As you said, you're quite optimistic. So let's hope that that comes about. But the markets are calling for attention, because in the last few minutes...